Good morning and welcome to today's edition of the London Session Open. Today is October 4th, 2019, and it's 5 minutes past 8 a.m. in the morning when I'm recording this market update. We're going to take a look at the markets. Today is Friday and it's a non-farm payrolls Friday, so volatility should be high. And if you do trade, you need to be very, very careful with your risk. This is a high risk of actually just losing money. I'm gonna probably sit on the fences unless I see something really good. So let's talk a bit about the short-term outlook for the euro. And I'm just going to give you the levels, and then of course you need to combine these with the non-farm payrolls. The last official figure for the non-farm payroll was that the number is going to be about 140,000 new jobs. And I think if the market sort of, if we have a negative growth, so say you got zero, then that would be very bad for the dollar. If we have, 75k jobs, that would also be bad, but not extremely bad. Now, what we're dealing with here, at least in the euro, is that we're dealing with an inverse head and shoulders. You might remember, I think about 2 days ago, I said I think the market's going to probably bottom out, which it did. Not only that, it also took out that trend funding level I was working with. Yesterday, I said the market might go down a bit, but then probably going to go up, which happened. Now, in this market today, we're dealing with an inverse head and shoulders. You get left, right shoulder, and head. You have the break to the upside, market moved up, and then down and up. And if one would buy now, you get a risk reward ratio of a 1.74. With stop is placed just below yesterday's low, and we'll hit this level up here. As for the target for the pattern is 105, 110.51. From a 110.51 or so, I think the market's going to turn lower again. We have stops here. Well, not stops, but I think this high here. And I think the market from here might go down again. Why? Because the long-term trend is bearish. And then I know the data from the US is not good. So what's happening here is that the US from data from US is just catching up with Europe. And as well, the dollar down here was quite overbought. I showed you the dollar index, which looks like this. I put that in an article a few days ago, and I said that the market was about to turn bearish. And we did indeed turn bearish, and I think we can still go down. You see that median line? Around here, I think the market might potentially bounce. I mean, it might even bounce here, but I think ideally the best opportunity to buy is lower. So I still think the dollar has more weakness over the next few days, but then maybe Monday or Tuesday next week, depending on what happens with the NFP today, but I actually see the market bottom out around here. And one market that I already have a better view on, and that view actually kicked in already, is the pound versus the dollar. I said the market might go up here, and put that in an article yesterday. The market did reach that sell zone, and then the market went down. So if you short it here, you should be up with about 40 pip or so. I think though that the market might actually revisit that level. But as long as it should be below 125.07, this overall trend is going to be bearish. In fact, we're going to be bearish if you're a long-term trader, as long as you trade below this high here, which is 125.81. But if you're just trading in short term, 125.07 is sufficient. Dollar versus the Japanese yen. I wrote an article that the Japanese yen needed to catch up with the slides in the stock markets. We saw some of that yesterday, and the trend is now firmly bearish. Remember, we turned bearish here on September 20th. The market moved down, but then it moved against us, almost traded above my trend finding level, but did not. And now we're pretty much back in profit. So if you did short here on the original entry, you would be up with about 76 pip now. Because of the bad situation in the world and the US data lately has been poor, I do think the market may continue to decline, and I think we might go up, but then probably gonna go down. Aussie dollar versus the USD is bearish as well. Actually, we're not gonna cover that one. I keep on forgetting. I'm sorry, I'm on autopilot this morning. All right, this is crude oil prices. Crude oil prices are at a very delicate spot. You might remember, closed here, you got the crude oil attacks, or the attacks on the Saudi Arabian crude oil facilities. The market went all the way up. Everybody got excited. I got excited about the move. And I personally thought they would take much longer to restore crude oil production, right? And then there was the threat of war between Iran, the US, and Saudi Arabia. That did not happen. I think that's probably going to take a bit more time. Well, actually, I'm not saying they will go to war, but I do think military threats is going to escalate again. So I think that will come back, but right now the focus is somewhere else. What's interesting here is because of those events, I think a lot of people just bought a lot here, and then the market never turned bullish. Instead, you got declining stock markets, and then people said, "Oh, stock markets are down, the economy's gone down. Why would anyone buy crude at $54 a barrel?" So they just sold it, and we went down. And everybody that's been long up here just got forced out, and so they can go. This was like fire sale. Going forward, I think we might spike lower. We might, get people stopped out, and then probably go up again. This is sort of the nature of this market. The same way as it sort of moves aggressively upwards, I think it might punish people for being long here right now. But I think in general, maybe wait until Monday or something like that when things cool down a bit. And we'll see what happens. I think if we're still trading above this low on Monday, we might probably bounce back up to the midpoint or something. I wrote that in an article on Investing Cube yesterday. Gold prices. Okay, I'm neutral on gold prices. I would not get too excited. We had this head and shoulders with head, left, right shoulder, and the break. I thought we were gonna go bearish, but with stock markets collapsing, everybody's wanted to buy gold. So I think here, for now, the trend remains bearish. So no real reason to make any changes here in the outlook. Might even get away with selling a bit on the high, stops above. It really depends on the no-for payrolls coming up. I can tell you that on Monday, if we're still trading below this level, we probably could move down. S&P, this is interesting. Finally reached that S&P target. Well, that decline. I actually reached that already. I think we reached the first levels here, and then added even more losses. And the scenarios I talked about, the Nasdaq 100, which I shared on Investing Cube, also did very, very well. The only thing that did not go very well is the German DAX. Now, I think here going forward, I think we might go up a bit. Sorry, back to the 4 hour. We might go up a bit more, but I think realistically, around these levels, 50% correction level and these lows, I think people are going to sell. Then we can also lower the trend defining level a bit to the 4th fib level, the 8.6 level, I think it is. And I think from these levels here, might get that a second attack, and and down here around these lows, I think we could potentially see a bounce from these levels, and then we'll see what happens. I know the world economy is not looking too great, but there's other research that shows that the world economy is stabilizing. It's just gonna take until March, so we need to wait. Well, it's a bit confusing, all this macro, but I can tell you that in general, the risk-reward ratio is favoring buy positions down here. Nothing wrong with putting maybe 1% risk or something like that. Just doing something like this. If the market does swing up, it will take 4 weeks or something, but you get a maybe 3.78 times risk-reward ratio. And I think that's pretty much it. Actually, German DAX, this is the German DAX. The market is at the lows. And I think if we swing up to the September 25th low, I think people might look to buy, sell. And then from these levels, I think the market probably is going to do something like this. And I think that's pretty much it. Guys, if you are interested, do make sure you follow me on Twitter. I know that the best way is just to follow me on Twitter. You get all my content, pretty much all my content there. You also have the Investing Cube Twitter, which you will find on investingcube.com. I also have premium education. So it's I think it's about 4.5 hours, 4 hours, I think it is, of premium education. So if you're new to trading, and especially if you're interested on forex trading, then I offer 2 complete strategies, and I offer advanced money management strategies as well, and I'll cover a bit of basics. But it's not what a pip is and things like that. It's more strategies, and that's actually available for any account with ATFX. So any account gives access to that. When you have created and funded a real account, in the member section you will find that. If you're interested to know more about that in ATFX, just visit atfx.com / I think it's UK. There's not a lot of content about the web, the educational course there just yet, but there's information about the about ATFX as well. If you have any questions, as you know, you're most welcome just to ping me. You can either reach out to me via Twitter. You're also welcome just to reach out to me via email and WhatsApp. Let me see if I can find my WhatsApp. You'll find these details as well in the comment section. So just below the video, you'll find all these details. Okay, if you have any questions, you got my Twitter, you got Investing Cube, and you have this WhatsApp number as well. You can just ping me. If you want to talk, we can do that as well. Have a great day, guys, and I'll see you guys on Monday for the next update. Thanks.